Hello, everyone. Good evening. I hope that most of you, are at least, 75% of you guys had a, proper trading week, right? It was straightforward, right? And as you guys know, right, we mostly focus on time here. And I will try not to go over 30 minutes, right? I'm trying to, keep everything very compact. And I'm trying to just be straightforward, right? I don't want to talk about, stuff that you don't need, but, you know, could help you. I just want to talk about things that work, right? Things that always repeat. So we'll just be touching on the basics a bit. I don't want to be, just introducing new things every week. Every week, new things. I've been doing that for a while, and I think that some people may have, gotten a bit confused, right? Because, whenever you talk about something that's new, a new topic, immediately, everyone drops everything that they, previously had in their hands that was working, right? But that's just how we are. Anyways, here, you guys can see on the screen, right? This is the economic calendar for this week. Today's Thursday, Q4, right? Where we usually expect reversals, right? We previously stated that, Thursday, would be important. Thursday would, more than likely, and I always say more than likely, not this is going to happen. Why? Because it doesn't have to. It does not have to happen. And that's why we have a stop loss, right? So here, but, fortunately this week it did happen, right? Thursday, you can see that we have 3 red folder news events here, USD, right? 3 red folder news events on Thursday, which is today. Tomorrow there's 2. Yesterday we just had 1. So when I saw this, right, the way I interpreted this information, right, was that, okay, simply, as how it looks, there will be more news on Thursday, which means that there will be more volatility, which means that it will be more important, right? Do you understand that? And that alone by itself doesn't mean anything, right? Well, it means that, there's a likelihood that we might, or, we will get volatility on that day. But, you need to have what? There are 2 main things. Well, there are 3 main things. This, number 1, this right here is number 1, right? Red folder news events, understanding that the number of red folder news events on, a particular day means something, right? The day with more red folder news events, right, has a higher likelihood of forming the high or low of the week, right? So for your sequential SMTs or intermarket sequential SMTs, that day will more than likely form the second swing, which could either be a failure swing or a stop run, which sends price lower. Do you understand? So just by having this information, you're ahead of everyone. No, you won't be perfect. No one will be perfect. But as long as you have your head on your body, right? As long as you're not risking too much, you'll be good, right? This is the gist of everything, right? This is the first, concept when it comes to time. You need to know which day is going to have, or which day might have the most volatility entering the marketplace. As you guys realize, right? This week we had a ex AMD, model, for, most asset classes. The futures triad, more particular, if I'm being more particular. So Monday, and you guys will see, right? Price expanded. When you see expansion on a day, right, which has no news events, expect price to return to that range. Expect price to return to, that leg of price action that just expanded for no reason, which it's not that it just expanded for no reason. It's just that price is making, and listen clearly to this, price is making space for itself, right? So the first thing is, right, to refresh everyone's brains, right here, you can see that on Wednesday, right, which is the, first day that we had news, and this is the FX triad, right, Forex triad. This isn't the only one, by the way, there are more, right, but this is just the main one, right, because if I just, if I was giving you for, Euro, GBP, and, all of the crosses and exotics, then it would be, very confusing. So that's why, we mainly focus on 9 pairs, right? The members of the FX triad, as you guys know, the futures triad, and the interest rate triad. So here, right, this was sequential SMT, right, between London session and New York session of yesterday, right here, right, the formation of the low of the week for the US dollar, right? It was Wednesday with the failure swing occurring here on Thursday, which is today. This candle right here is a precision swing point. Here, and you'll find more if you go down into lower time frames. So here, sequential SMT again, here sequential SMT, here sequential SMT, right, where we have the British pound, right, and the British pound just being the British pound right here, right, stuck within a range still, while we had the euro falling, and sequential SMT here as well. So as you guys can see, right, if you guys remember, right, the failure swing will expand more, just as how here, right, there's a failure swing here, didn't go above this high, dropped, right? Here, failure swing expanded. Here, stop run, didn't drop as much as, this one. And here is where, things get interesting, right? So here, right, we have 2 precision swing points, right? The first one, which occurred here, right, here it's clearer here, right? This candle here is the up close candle. This candle here is the down close candle for the Dow, right? There was no sequential SMT here, but you can see that there was opportunity within. This is a 4-hour candle, right? So, there was opportunity here within this candle right here. What happened? There was price dropped, took this low, right? Then expanded higher. Price traded above this precision swing point, formed another precision swing point at the same time, right? That this one was one, this one, obviously, that's why it's a precision swing point. All of the entries, right, which caused price to fall lower, was within this precision swing point. And this is, one of the most important things. Precision swing points, I would argue that it is, more important than SMT, because the precision swing point, the candle which, immediately follows after a precision swing point, it usually gives a reversal. Even if it's, it just trades to the 50% of the, precision swing point, it still gives you something to do. And it's always a sign that price is going to reverse, right? So here you can see this was SMT, sequential SMT. Price failed to run up below this low, also failed to close here. Here, close below this low. Here, failed to run below this one. Here, wick below this one. If you look at the 1 hour time frame, then this will be clearer, of course, right? But the thing that I'm trying to show you right now is here, where we have a precision swing point here, and this is specifically, right, for the weekly cycle, right? So this is the only time that, you could pay attention to the 4 hour time frame in regards to the weekly cycle, right? So given that we had this precision swing point here, 4 hour time frame, right? It formed when? Wednesday. Another one here formed when? Thursday. So we have a precision swing point above a precision swing point right here. Do you see that? That's a cracking correlation. Here we have hidden sequential SMT, and we have right here the cracking correlation between these precision swing points, right? So we have two, right? One here, one here, one here, one here, one here, one here, two for each asset. The next immediate candle, which comes after the second precision swing point forms, which, they should form within different quarters, usually expands, usually gives you a reversal. And what else? Which day is it? It's Thursday, right? The day that we expected, expansion, reversal, intermarket sequential SMT to form, right? And why did we expect? Was it just because, it's Thursday? It's just Thursday. So every Thursday, I'm not going to look at the economic calendar. No, you have to look at the economic calendar, because this could have happened on Wednesday if there was no news or less news on Thursday. Here, right? Previously, we were looking at the 4 hour time frame, right? There was a 4 hour precision swing point. Now, within that 4 hour precision swing point, what do we have here? A 1 hour precision swing point. You see, we were getting at that, right? So we have a precision swing point inside a precision swing point. Then what happened after? Expansion. So do you guys remember when the last time we spoke, there was just consolidation here, right? There was nothing here that was clean, right? But what was, what stood out about the consolidation? Do you guys remember? Here, right? We had sequential SMT here at this low and sequential SMT at this high, right? This was within the daily cycle. If you guys, remember, right? The higher time frame cycles, sequential SMTs, or intermarket sequential SMTs will trump the lower time frame sequential SMTs. And as you guys remember, right, I talked about how equal sequential SMTs, meaning you have, two sequential SMTs within a cycle, whether it's a weekly cycle, a daily cycle, monthly cycle, doesn't matter, right? If you have one forming the high of that particular day and one forming the low of that particular day, this consolidation will breed high probability. What does that mean? If we have a higher time frame sequential SMT form above that consolidation, given that, because you guys forget this part, right? It's above the true open, which for the week, which it is. Talk about that eventually, right? Once that happens, you're going to get a reversal. Given that, and I'm saying this again because it's important, you have news events during that quarter, right? So here, this was consolidation. This is manipulation, expansion, AMD. Here, this is the euro, right? So we had, this is where we got, well, one of the assets that gave us the intermarket sequential SMT, right? And another thing to note, right, is that while this occurred before this high was in place, right? So we had this right here on while this candle was, dropping, we had this one being formed, the precision swing point. So this candle just dropped, the precision swing point formed. What's going to happen? We already have sequential SMT, intermarket sequential SMT here, right? This is going to follow suit. This is showing you weakness that's, upcoming here, right? Also, we had intermarket sequential SMTs between bonds, well, between the entire IRT, right? And again, while price was already dropping, that's when this formed, right here. So the thing that's important right here is noting that, okay, there is sequential SMT. If this candle did not trade above here, it would not be intermarket sequential SMT. It would not be important, right? But the fact that this was already in place and then this occurred, intermarket sequential SMT, price was already here. What's going to happen? It's going to try to keep up with this. It's going to try to do what this has already done. Also, if you look at the 50-minute time frame, right here, if you look at the 50-minute time frame here, you'll also see another sequential SMT. So here on the chart, right, we're looking at the Nasdaq up the top right here, right, and you basically only do this, but you can do this as well, even if there was sequential SMT between the E-mini and the S&P 500. You don't really need sequential SMT, right? You don't need it. It's just for, accuracy, or, you don't 100% need it, but you need precision swing points. Yes, you need precision swing points. You need it 100%. Without it, I used to say before I talked about precision swing points, whenever it was what it used to be a secret, right? I used to just say, oh, it's SMT, SMT. No, it's precision swing points. That's what it is. You need to focus on that. You need to, I see people just, posting charts, not noting the precision swing point. You need to note it. You have to note it. It's not just, oh, there's SMT here. No. This is important. If you see a daily precision swing point form, pay attention to it. Will it 100% of the time span out? No. Not 100% of the time. Nothing does that, right? And I am not going to, act like, it's perfect. It's highly accurate, but it's not perfect. I'm not going to just, okay, I get this wrong, and I come and say, oh, you know, the market makers are chasing my stop loss. No, I'm not going to do that. You'll never see me do that. I don't care. I'm here. I wake up in the morning. If I place a trade, it hits a stop. I don't care. If I'm wrong, I don't care. When I'm right, I still don't care. And that's how you should be, right? That's the mentality that you need. It's not, okay, I need to place this trade and I'm going to risk 50% of my account. And if I lose, no. You lose? Well, you have permission to go back in with half risk. You lose again, then you're done. You win, you're done. That's it. Right? So here, where you see me have this yellow icon, right? You can see that here, this candle filled this gap, right? Right before this position swing point was formed. Actually, right? Remember that all of this that you see happening here occurred within the 4-hour precision swing point, right? Just remember that. It's fractal, it's all fractal. So here, price traded down into this gap, expanded, then immediately after, and I saw some of you guys just took the precision swing point, and that was amazing to see you guys just trade with the precision swing point so long, right? So here, run above this high, right after price filled this gap, remember that, then what happened? Just dropped. Why did it drop? Okay. Here, this gap was filled. And because this gap was filled here, and the precision swing point formed after this gap was filled, there was no reason for this to get filled. And during the formation of this candle, I posted high today is in whatever, right? Price continued to drop. Here, we have this consolidation, if you guys remembered, right? Was formed by sequential SMT here, sequential SMT here. Higher time frame sequential SMT trumps this lower time frame sequential SMT. Right? Even here, these lows, there was sequential SMT. Right? And within the lows, we had precision swing points. Right? So, what do you get from this? Sequential SMT, right? Even though, it breeds expansion, it gives you reversals most of the times. Whenever you have intermarket sequential SMT, it will expand more. Understand that nothing in price is random. Nothing just happens, right? And that's why you have to be patient, because these precision swing points, sequential SMT, intermarket sequential SMTs, something that's needed for them, and without this thing, which is, red folder news events, without that, without, having these things that we look for form within that time, then you are, you're just going against, the odds. That's what you're doing. Right? I got a question, someone asking, do I really need to, use, red folder news event? Do I need to pay attention to it? Yes, you do. That's the number one rule. That's why, since we've began, every time we do a live stream, we look at the news. We look at what we need to expect. right? So here, where we have this high, this low, right, of this specific day, whenever you see, this type of price action occur within, or on Tuesday, first of all, here's the true open, right? You can see that price went above there and did all the business above the true open. It's not here. It wasn't right here. Would it even make sense if it was here? True week open, right? And as I said, whenever you see this type of price action on Monday, it's just, creating space for itself on the way down, right? So we expanded. Definitely not going to trade this. Once you see Monday expands, you look for targets, right? Here, true open. Price consolidates around the true open. How did price consolidate around the true open? What caused price to consolidate? SMT, SMT, SMT at the highs, SMT at the lows. That's what causes consolidation. We went in a tight range until Wednesday. Sequential SMT, price expands, intermarket sequential SMT. Precision swing point, and price drops. So I hope that you paid attention. I hope that you took notes, right? I don't put titles on them for a reason, right? Because, I don't know if someone's, not paying attention and they just try to, steal the information and just post it somewhere else, right? This way you have to watch it. This way you have to watch it and pay attention, right? This way you have to take notes. This way you have to, basically just name it yourself. Right? And no one can just, take it, download it, and just, because it won't have that title that, has people just looking at it like, okay, what is he talking about? Oh, it's just a lecture. What's new that he talked about? Anyways, we will be back. Of course. Right? Sunday at 6 p.m. Eastern Standard Time if we have news on Monday. Or Monday, 6 p.m. Eastern Standard Time if we have news on Tuesday. Pay attention to this. Right? The only thing that you need, is to just be able to control yourself. Don't trade when you're not supposed to trade. And if you can't manage that right now, it's okay. Eventually you will, get to that level. Whereas, you just want something that works and repeats, and the most important thing is you need to know what's going to happen or what might happen at this particular time. And with that being said, good luck and good trading.